All right, it is 2 o'clock. I'm excited. I'm Casey Seaborn here from Stride, introducing you to the Stride Live for this Thursday, August 15th, 2024. And I'm joined once again by the tax aficionado, Morgan Holmes. How's it going today, Morgan?
Doing great. Thanks, Casey.
Great, glad to hear that. So today, we're talking all about how to turn your personal vacations into tax deductible business expenses. So you're going to go on a vacation, you'd like to maximize that, especially for the MSP and the professional service owners who are always working, even when they're resting. What can you do as a business owner to now use those vacations as a business expense? And Morgan's going to navigate through all the tax implications of what you can do, what you can't do, and the most important considerations for effectively handling if there was any sort of scrutiny or if anybody looked at that expense, that it justifiably shows up as a business expense. So, Morgan, without further ado, what do we need to know about how you can turn a personal vacation into tax deductible business expenses?
Sure. Thanks again, Casey. Uh, in order to take a tax deduction for your vacation, the primary, the most important thing is to make sure that the purpose of that trip is for business, or at least a significant portion of it is business. So more than 50% for domestic travel will get you a good chunk of business deductions for the travel portion, the flights, etc. While you are on vacation or on the business trip, the meals that you're participating in, the cab fares, any of those travel related expenses, as long as they're for business purpose, are tax deductible for your business.
Got it. So, what's really the first step? How do you say, hey, differentiating that this truly is a business trip? What's that first step? Is it just saying, hey, this is a business trip, or what goes into that?
Yeah, so really the trip has to have business purpose. So if you're going to a conference, and you're going to tack on some days at the end of that conference to go to Disney World or wherever you're going to go, step one is you have to make sure that the business portion of it exceeds the 50%. So in other words, if you're going for 5 days, 3 of those days should be the conference, 2 of those days could be your trip to Disney World. From there, the other expenses while you're on your trip just have to have business purpose. So if you are on that trip and you go out for a meal, make sure that you're taking a meal with a customer or one of your staff, something like that. So that's the important part, is just to make sure that you have business purpose for the not just the trip, but the items while you're on that trip.
Got it. So the general guideline, the difference is if it's a 5-day trip, 3 days need to be for business, 2 days for leisure, or at least greater than 50% is spent on working for the business or a business purpose. That's what I understand.
Yeah, for domestic travel, yes. It's a little bit different for international travel, but for domestic travel, yes.
Got it. And then what are some of the deductible expenses that a business owner can consider? Obviously, I think flights, any sort of travel, the actual getting there. But what are some of the things that an MSP or a professional service owner might not consider as an expense that's deductible?
Yeah, sure. So again, once you exceed that 50%, then the travel to the conference, the airfare, train, however you get there, is deductible. The transportation to the airport is deductible. Transportation from your airport to the hotel business meals, anything like that would end up being a good business deduction.
Got it. Now, meals and entertainment always seems to be an area where there's a lot of gray area questions. Typically, meals are 50% deductible if it's for general business. But let's say you take your team out for a team building at a baseball game, or you're going to a game night at an arcade. Are those technically considered a business or a deductible expense?
So entertainment expenses are currently non-deductible. If you have a bundled package, so for example, 12 tickets with meals, or hot dogs at the ball game or what have you, as long as you can carve out or specifically identify the meal part of it, you can then split the entertainment and the meal, leaving you with 50% deduction for the meals and 100% non-deductible cost for the tickets.
So the work has to actually be work. It can't be, hey, we're having some conversations at the ball game, but the purpose of why we're there is to enjoy the game as a team. That wouldn't fall underneath the deductible expense
No,
categorization.
no, entertainment is not deductible.
Got it. So talk a little bit about how do you mix that business with pleasure or leisure? Like, what is that process that a business owner should be considering or being mindful of when they're doing such?
Yeah, so the important part is that as you are incurring costs while you're traveling, that you're documenting your business purpose for those costs and just keeping track of, what you're doing, when you're doing it, et cetera, so that you can verify or validate that, more than that 50% is business, the rest is personal, and then also validating that the meals, for example, have a business purpose and are therefore deductible, or at least 50% deductible.
Got it. And then what's the separation? I know a lot of business owners, they're going to use potentially their business credit card to pay for the entertainment at the ball game or for taking their team. How should they go about navigating that from the actual paying for the events or paying for the expense?
Yeah, so where possible, you should try and keep your business expenses on your business credit card and your personal expenses on your personal credit card. If it's not possible, again, just make sure that you're keeping great records. And if it does end up on your business credit card, that someone can easily identify which are the personal expenses and either classify those as a distribution or just a non-deductible item on your tax return.
Got it. Now, a lot of business owners, they might want to take their spouse, their family with them. Can they directly deduct the expenses from their spouses during that process?
So they can, but the spouse also has to be there for business. So if your spouse is there to go out and sit by the pool or go do whatever personal items, then no, that would not be deductible. But frequently we see spouses at conferences because they're either employed by the business or they're helping the husband do something in the business, and that would be a valid business deduction. But if it's this, you're bringing the spouse or your spouse and the family so that they can go to Disney World while you're at the conference, that would definitely not be a valid business deduction.
All right, so have your family involved in the business, at least at some clearly documented process to get at the very least their travel for getting there can be deducted and potentially their lodging too. Now, I think conferences are the easy one. You bring your family, you attend a conference, you're there, it's very easy. You can document, say, hey, I was at ChannelCon, I was at IT Nation, I was at that event, and here's what it's for. But what about the non-traditional? Like, let's say you went out for a leadership summit, or let's say you traveled to do more of a networking and team building. How do you prove the intent of that trip was truly related to business if it's not so cut and dry, like go attending a conference?
Yeah, so I would suggest that anybody that's going to do something like that, where they're going to have a team building event in another venue, keep an agenda of what the meetings are that they're doing. Again, document exactly what it is you're doing, who it's with, etc. So all of that is going to help you get through an IRS examination or other tax authority scrutiny if, in fact, you're questioned.
Makes sense. So just being able to document. The more documentation, the better, and it never hurts to have too much, is what I'm hearing.
That's right. Yep.
You mentioned a little bit earlier around international travel. I think of it clearly right away. Anybody who's in a ConnectWise Evolve peer group, sometimes they're traveling internationally. What are the rules? How does that different or differentiate compared to, let's say, domestic travel as a business owner?
Yeah, so in international travel, it's 75% business purpose.
Got it.
So you just have to cross over that threshold. And then similar to domestic travel, you're allocating expenses based on number of days or actual business expenses for the period in which you're doing business, and non-deductible expenses or personal expenses for the period that you're not doing business.
Got it.
Yeah.
Got it. What about cruises? I'm sure there's a lot of owners who want to take a cruise. Does that count? or can that count for, let's say, hey, I'm taking my team out, we're going on the Carnival cruise, or we're going to go overseas and go on one of the Norwegian cruises. How do you navigate something like that where it's an experience-based travel?
Yeah, so cruises also have their own specific rules. So there's a annual deduction or annual deductible limit of $2,000. In order for you to actually qualify for that, all the ports on that cruise have to be US, and the ship actually has to be registered in the US as well. I think probably no cruise ship that I'm aware of has a US registration. So chances are the $2,000 annual deductible amount is not applicable in most cases. However, you could potentially take the maximum per diem travel rate, which likely might get you over the $2,000 limit anyway. And then again, there's other expenses that you could separate out. So even if you can't get past the 2,000 limit, or you end up with some non-deductible travel there, you definitely could carve out things like if you're going on a cruise and there's a education or a workshop on that cruise, and you know what the cost of that is, that would be a good business expense. And then any other travel expenses getting to and from the cruise, et cetera. So
got it. So that's interesting. So we've covered essentially, hey, the trip has to be purpose primarily is for business. You're conducting work, you're conducting business. That's why you're traveling. We talked about some of the deductible expenses, how to allocate and mix that. Hey, work and professional with leisure and pleasure. Talked about the difference between domestic, international, and cruises. One thing that comes to mind is the different types of business owners. Obviously, we see a lot of different situations. The single member LLCs, the self-employed, the C corps, the S corps. Is there any differentiation of how you can go about using these type of tax deductible expenses depending on this ownership structure for organizations?
not necessarily. I mean, the rules are pretty standard or pretty applicable, whether you have a Schedule C business, a partnership, an S corp, or a C corporation. I think Schedule C businesses obviously sometimes get a little more scrutiny than a corporate business entity does. So
And when you
again,
say Schedule C, I hate to interrupt. When you say Schedule C for the viewers, what type of entity is that?
sole proprietorship.
Got
So
it.
not non-incorporated or non-organized partnership or a corporation.
Now, would that include the single member LLCs that don't say get taxed as an S corp? Do they fall into that Schedule C?
Yes.
Got it. Got it. Figure we could, distill the accountant speak sometimes. So, I want to
Yes.
make sure we clearly, so if this relates to you, it directly relates to you.
Correct.
Now, with the corporations and LLCs, is there anything that they need to be considering how their employees are logging expenses, or is it really just document, clear purpose? What category is it? Like, what are the considerations for having your employees manage that?
Yep. Keeping your documentation. If your employees are charging on their personal credit cards and asking for reimbursement, make sure you get all the documentation from them, making sure that they actually participated in the event so that you can meet that business purpose threshold. So again, it just gets back to making sure you have all the documentation and all your ducks in a row in case you're scrutinized.
Got it. For the business owners out there, what should they say to their tax professional, or how should they consult? What are some of the things that they should be bringing up? What does that process look like for them?
Yeah, your tax professional likely will ask you questions, when you have significant amount of travel on your income statement. You just want to make sure that you can let them know that you have the proper and adequate documentation if they need it or want it, and make sure you keep that documentation for quite a bit of time.
Got it. Got it. So covered a lot here today on how you can turn your personal vacations into a tax deductible business expense. Trip needs to be for business, primary purpose. It can't just be vacation and a little bit of business. It needs to be business and a little bit of leisure. Certain deductible expenses around travel costs, accommodation, meals, entertainment, transportation, they're all a little different. So obviously consulting a tax professional would be advantageous to make sure you're following accordingly. Differences between domestic and international travel. Domestic is a little more flexible, a little bit more freedom around that 50% of it has to be at least for business as opposed to 75% for international. And then cruises, special consideration. So if you're considering a cruise, I would definitely talk to a tax professional. What else, Morgan? What's kind of the, hey, it's too long, didn't listen? What's the primary thing that an MSP or a business owner should think when they're looking to take advantage of something like this?
Yeah, I would suggest that, first of all, if you're going to be taking a significant or expending a significant amount of money on business travel, you first contact your tax professional to make sure you understand what the rules are, rather than going on the trip, coming back and saying, "Hey, I took this trip. What's deductible?"
Yeah.
And then having to backtrack and document what you did, and maybe you don't keep all your receipts. Secondly, ensure that the primary purpose of the trip is business, or a significant amount of it is, and not pleasure. Document. Make sure you keep all of your receipts, agendas, anything like that that could support your case as to why that trip was tax deductible. And then a good or a best practice might be to keep a travel log, for the days that you're on that trip, what you did, who you did it with, and why that was a business meeting or a business function and not a personal function. So,
Got it. So if you're a business owner, you're looking to turn your personal vacations into a tax deductible business expense, it first starts proactive. Reach out to your tax professional, reach out to your CPA, make sure you have a good solid. The next one's going to be a plan. Make sure the plan, the primary purpose is for business activities. And then the last is paper trail. So remember the 3 Ps: proactive planning and paper trail. Talk to your tax professional, have a plan for the trip with a clear agenda that it is for primarily the purposes for business, and the paper trail, receipts, logs, agenda, anything that if somebody, the IRS said, hey, is this really for business? You have without a doubt proof to say, yes, this is exactly what we did. We went to ChannelCon, we went to IT Nation. This is all the activities that took place, and this is why it's deductible. Morgan, thank you. I really do appreciate you joining again on the Stride Lives here. You'll be able to stream this for the viewers on YouTube after. We'll be sharing content, or go to stride.services.com and you'll check out the manuscript that will be on our blog. So, Morgan, once again, thank you again for taking the time.
you're welcome. Thank you, and everybody
All right.
enjoy your vacations.
Yes, enjoy your vacations. It's that time of year picking up. So,
All
have
right.
a great day, everyone.
Thanks, Casey.